What's up, everybody? Alexander Fibonacci, the day trading champ, and today I put together the most important earnings you need to be watching next week. Now you're like, okay, that doesn't look like much, Alexander, and that's right, because I checked the earnings for Monday, Wednesday, Thursday, Friday, and guys, they're all junk stocks. They're like $40 or less. Nothing that is that important that we need to really be looking out for. On the other hand, though, these all are about $100+. So we got Adobe aftermarket, FedEx aftermarket, and this like Cracker Barrel company, whatever that is, there trade at like $130 a share. So we're gonna be keeping track of these. We need to know the correlations. What stocks are these earnings gonna affect? So we're gonna get into that in this video. Alright, at this point, most of the losers probably left the video already, so let's get started. Guys, Adobe is owned by Apple, okay? So this is a huge fact we need to know. Why? Because if they're going to take out of Adobe, if Adobe starts selling off, what does that mean? It means Apple is also very likely to sell off. Now here's the thing about Adobe: since it's releasing earnings, there's going to be higher premiums probably on these contracts, right? So how do we work around that? We work around it by knowing a simple correlation that we just found out with a quick internet search, by taking the extra time, by not being lazy and figuring this out, okay? So now we know if we see Adobe selling off, we can start buying Apple puts, and those Apple puts are going to be cheaper and more profitable. So that's exactly what we will do if Adobe starts selling off next week. With that being said, we never come to any trading conclusions without first looking at the charts. Now guys, you're looking at this chart and you're like, Alexander, tech is so beat up. No way it's going to keep dropping at this point probably. You're like, all the bear signs have already hit. Do you really think it's going to continue lower? And I'm thinking, yeah, it's a huge possibility. Why? Well, look at the chart. Okay, now you're looking at it and you're like, bearish crossovers already happened. MACD bars converged already. We got RSI pretty weak already. I mean, I'm sure Adobe's going to rebound. We're on a solid uptrend. We're at the bottom of the trend pretty much, a low risk range, and you're like, all right, maybe I should actually buy calls on Adobe. Now, okay, maybe you're right. Maybe you're wrong, and let me prove to you why you could be wrong. Guys, we got bearish hook forming on the weekly chart. Ooh, did you ever stop to think to look at the weekly chart, or do you just look at the daily chart? It's very important you look at the weekly chart as well, and on top of that, look where the simple moving average is on the weekly chart. It's all the way down here. Okay, so now it doesn't seem so crazy to drop down there. Okay, and now you see, like, wow, there's a lot more room left to the downside actually, and it looks like there's a lot more downside potential than upwards potential here at this point, right? Whereas when we're looking at the daily chart, you're like, okay, looks like we got a lot more upside potential than downside potential, right? Because you're looking at this simple moving average. It doesn't look like we're going to drop down here, but that's why you got to look at multiple time charts. And now we can arrive to the conclusion that there's actually more downside potential, okay? On top of that, the bars on the MACD have not even converged to the downside yet. Guys, this is looking really good. On top of that, if Adobe sells off next week, be ready for tech to sell off as well, because Adobe will most likely have great earnings, right? I mean, it's a good tech stock that probably did great in these market conditions. Now, when a stock that has great earnings can't continue higher, what makes you think that other stocks that are do the same, they do great in these market conditions, why would they continue going higher when they don't even have great earnings or any great catalyst to push them forward? So super excited to see how Adobe trades, because depending on how Adobe trades after earnings, it's a very good I guess crystal ball as to what's going to happen this week in the market. So be ready for that Tuesday after market. Oh yeah, I like this, guys. I didn't even realize that this Cracker Barrel Old Country Store, guys, I don't know what the hell that was until just now. I had to look it up. Supposedly it's some kind of restaurant store, and they sell like probably sausages or some shit. So you know what? I don't really care what they sell actually. I do know though now that they are a restaurant, okay? And what you don't know, because the YouTube channel wasn't around, or I hadn't made the YouTube channel yet, is these restaurants after earnings during these market conditions have all been dropping like rocks after earnings, okay? So it doesn't even matter what the earnings are, right? We know that there's extremely high probability that it's going to reverse after earnings. Look at what McDonald's did after earnings. It dropped hard, okay? Then look at what CMG did. Chipotle Mexican Grill. After earnings, Chipotle drops, how many points is this? From the top, 1184, all the way down to 1116. That's a 70-point drop. Now, if we measure that in percentages, you're going to have to give me a sec, because I am not a math wizard off the top of my head, but I'm going to calculate that and tell you how many points that could possibly be on this barrel shop thing. Alright guys, I just did the math. Now from 1183 down to 1116, that is a 6% drop in CMG, okay? So you're thinking, well, a lot of people don't think is, okay, well, CMG dropped 70 points. That doesn't mean that this barrel thing is going to drop 70 points. You're right, it's not. But we measure in percentages, okay? So we drop 6% here. Now, calculating this on this Cracker Barrel thing, okay? 6% on this Cracker Barrel is going to be about, how many, what did I calculate? 8.2 points, okay? So now you know that if it pops up like CMG, you can short it and get an 8-point drop possibly, something very similar. Why? Because we noticed that restaurant stocks do this after earnings. I just showed you McDonald's and CMG. It's a very likely occurrence, so be ready for that. And I guarantee you, before you came to this video, you weren't thinking about Cracker Barrel old whatever the hell that is, guys. But here's the thing, you don't even need to know that much about these stocks. I mean, you got these people who are trying to figure out their financials, all these earnings per shares, all the guidance and everything. Guys, what matters is how the stocks react, okay? And you figure that out by seeing how previous stocks have reacted. So that's exactly what we did here. So don't be surprised if Cracker Barrel drops 8 points on Monday or Tuesday, I think is when, yeah, Tuesday. So be ready for that. And the next trade we're getting into is FedEx. Now, guys, let me show you how juicy this trade is, okay? So we got the bearish cross already forming, but guess what? Clearly, the stock is up 100%, and not the last 5 months since the crash hit. It's actually up 100% in just the last 3 months. Okay, so why is it up so significantly in the last 3 months? Clearly, this company is going to be expecting great earnings, okay? People buy stocks when they expect good earnings, accelerated growth. That's why stocks go up, okay, guys? When they think there's a great future for the stock. So what happens to the stock? Well, it's going to be the same story, just like what we've seen in Zoom, Amazon, Shopify, Tesla, Apple, all these amazing thriving stocks in the market conditions we have today. So guys, we get the same thing. Guys, watch this happen next week. We pop up and drop, okay? Now, look at this actually. The last time FedEx released earnings was here in July. Look at this. We go up 20 points. Now, what do we get here? Look at the wick, okay? You short it from the top at 165 it was here, and you watch it drop all the way down to, what is that? 158. Okay, that's, you capture a 7-point drop. Now you're thinking, Alex, why would you not just buy calls before the earnings? Because the calls are going to be so expensive before the earnings that by the time, even if it does go up significantly, you're not going to profit anything off that. You're going to be much better profiting off a 7-point move to the downside than you are going to be off a 20-point move to the upside on calls. Why? Because it's going to be priced in. It's going to be, the IV is going to be there on the contracts. That's implied volatility. It's going to make the contract extremely expensive. So you rather capitalize on a smaller drop than a crazy rise after earnings, okay? So that's why we short this thing after earnings, especially if they're good earnings, because guys, we already know how these other stocks do. So it's very likely this thing pops up and drops. On top of that, I forgot to point out on the daily chart, look at the volume. Decreasing volume since the last earnings. I mean, the volume's only gotten weaker. Look at this. You draw a straight line down. And guys, I thought I would show you how this looked on the actual chart, okay, the daily charts, okay? So we get the earnings on FedEx, we shoot up, and look at the tail pop out. You see that happen? You see that forming? You short it, okay? So you go from 163 all the way down to 155. 8-point drop, but it's very easy, and we already know, we have the experience doing this. Why? Because we've done this with the other stocks during this earnings season. So take advantage of this, guys. With all that said, these are the top 3 stocks earnings releases that you should be keeping track of this week. Guys, I guarantee before this video you were not aware of these, or at least you were most likely not going to keep track of them. And on top of that, you probably didn't know the context or how these things would react after earnings, so you did learn some pretty damn important information. So subscribe to the channel so you don't miss out on more content like this. Leave me a like if you liked the video and you found it useful. Guys, I want to know what trades you got coming up this week, so let me know in the comments if you got any video ideas, anything you want me to explain, anything you want to learn. Leave it in the comments so I can make a video about that for you. Guys, with that being said, I'm Alexander Fibonacci, the day trading champ. Let's make it a great week, and I'll see you on the next video.